In 1973, the stock market crashed hard. It lost half its value and took 20 years to recover. January 1973. Wall Street was celebrating. The market had just hit the highest point in all of history. 50 elite stocks seemed unstoppable. Investors poured every dollar they had. Nobody questioned if this would ever end. Everyone was confident. Banks were lending freely. Ordinary people were investing for the first time in their lives. Cracks were quietly forming everywhere. The Bretton Woods currency system was now completely and silently collapsing. Nixon devalued the dollar. Confidence in the U.S. economy started cracking badly. And that was only the beginning. October 1973. Arab nations cut off oil to the U.S. for supporting Israel in the Yom Kippur War. Oil prices rose 6 times in 1 year. Gas lines stretched for blocks. Inflation spiraled out of control. Interest rates climbed higher and higher. Borrowing became too expensive. Businesses shut. Families could barely afford gas anymore. Then came Watergate. Nixon caught. Investigated for corruption everywhere badly. American trust collapsed with the market. Troops were leaving Vietnam fast. Uncertainty spread everywhere across the nation. The country felt like it was collapsing. Investors panicked and sold everything. The S&P 500 crashed from 840 points all the way down to 407. That was over 50% lost. Trillions of dollars in total wealth vanished in less than 2 years. In the UK, it was even worse. Their market lost 73%. Worst crash ever recorded. This became one of the most brutal bear markets in history, second only to the Great Depression itself. Unemployment surged. Businesses shut down. Investors swore off stocks completely. They believed the system was rigged. Most people never learned this truth. The market recovered and came back. Companies that survived came out leaner and stronger. Today's biggest corporations trace their roots back to this era. Wall Street calls 1973 a cautionary tale, but it proves even the worst crashes become distant memories eventually. The lesson from 1973 still applies today. Markets crash. Panic feels rational, but patience always wins in the end. Every crash in history has recovered. The investors who win are not the smartest. They simply never panic sell. It is never about timing the market. It is always about time in the market. 1973 proved this beyond any doubt. Subscribe to Sticknomics right now for more unbelievable stories from financial history. Every week, a new story awaits you.